Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Tuesday, March 1st, 2016. Welcome to Super Tuesday. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. This room is a live trade room. We come together each morning and take a look at the market, macro to micro, take a look at the structure, draw down to the micro, and what our trade levels and our hypotheses are for the day. This is a subscription room, so if you want to come in and take a free trial, I'll put up my contact information in just 1 second. Before I do that, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade metrics. For contact, please give me a contact at quantumleapfutures@gmail.com, or give me a call on my cell, or send me a Skype contact request at Doug_McKay. If you like what I'm doing, please send me an email or a like or contact at Crazy2 on Twitter. Okay, so let's take a look at yesterday. Yesterday, we were looking for a rotational day. We had made a fairly decent move up and made that high last week at 1968.75. We'd come back and we were trading just in the lower distribution of the prior day. We basically chopped around the low of the prior day. Friday, we held that 42 level, and more importantly, the CLVN at 41, but we did put in a double bottom on the IB. Rotated up, got to the high of the prior value area, rejected the value, had a beautiful Mr. Sneaky. This Mr. Sneaky led the way. Not only did it lead the way yesterday, it also led the way last night. I'll show you. And then we just rolled over, got below the 46 area, the 47 VWAP at the time, and at that point in time we were looking for a rotation through for a neutral day. Came down, put in the neutral day, and then we were looking at the possibility of going down and testing the month open and putting a neutral extreme day. And we came down and tested the open. We actually closed our month on a negative. We closed, it was basically a doji month, but we closed at 1928, I believe. So February went into the books as a negative month. We never got close to critical mass. Critical mass was up at 1967-68 area. So the bears took control and brought us all the way back down and tested the open of the month and closed negatively. Taking a look at the news, we had Canadian GDP. I didn't check to see what it came in at. Came in at 0.2 versus 0.1, but better than 0.3. So not bad there. 9:30, we have RBC manufacturing PMI for Canada, and then no real news until 9:45. We have final PMI, and then ISM manufacturing PMI at 10 o'clock. Constructing spending, manufacturing prices. So we have a fair amount of news coming out 15 and 30 minutes after the open. All day we've got total vehicle sales coming out from the auto factories, and then nothing really else in the news. Let's just take a look at where we are in terms of the trend. I start with a basic candlestick chart, a 9 EMA and a 20 SMA. As I said, February went down as a negative month. We actually closed at 28.25, and we opened at 29.75. So negative month, but it was a doji month. We opened this month last night at 1928. Mark that into your journal. And currently we are below the 9 and the 20. still in this possible downward trend on the monthly. On the weekly, we did close above the 9 and the 20 last week. So far we're holding, but we're in this consolidation, but we're challenging the downward trend on the weekly. On the daily, we're still in this upward trend. We've got slope and separation, and we're holding the 9. On the 4-hour, we had fallen below last night, got down. Beautiful Mr. Sneaky on the 5-minute. We also had a Mr. Sneaky on the 4-hour. So it looks like we've got a possible upward trend starting on the 4-hour. On the 1-hour, we have a naked cross down here at 1936 area. But we do have the start of an upward trend. Again, there's Mr. Sneaky on the 1-hour as well. They're showing up in all the different time frames. There's the one, we had a FUBAR, Mr. Sneaky, Tech Gap, and a beautiful rally after. So far we've got an upward trend, but we are challenging it right now on the 30-minute. On the 15-minute, again, FUBAR, Mr. Sneaky, Tech Gap, beautiful rally, but we have now rolled over and getting a possible start of a downward trend. We do have a little bit of a Mr. Sneaky setting up here on the 15 minutes, so see if we can bounce off of that. On the 5-minute, this is the Mr. Sneaky we were talking about last night. Neil and I showed up beautifully, started this long move up. But right now we have broken down below the 9 and the 20. We had a FUBAR Mr. Sneaky Tech Gap right here, but we've closed the Tech Gap and we're rejecting the 9 so far. Possible start of a downward trend, slope and separation. So taking a look at the bigger picture, we're trading 1942 and a quarter. We do have the CLVN here at 1941. That's going to be a key trade line for us right now. What we really want to see is a break above this 43. Break above this 43 should give us a push up into this 1949. The longer time frame microcomposite is still down in that 1890. We have a target below down here at the 1915, and last night we went down and tested this 23. I can't stress enough how important it is to understand where the price is being accepted before breakouts, where it's held after breakouts, and watching the value area. We broke below this value area at 36 and a quarter yesterday, and what did we do? We rotated down to the 23, chopped around here, went down to the 20, and then we bounced from there. And what do? We rotate back up through. What are we coming up to? Is that 49. We got up to 47.75. So we missed this by 6 ticks or 5 ticks. If we hold above the value area high, I would look for them to move up into this 1949 this morning and possibly come up into this 52 area. If we get below the 41, look for them to come down and test the 36.50, and if they break 36.50, look for them to come down into the 32, test the CLVN, and any break below 32, look for them to close the gap at 30 and another move down to the 23. This time, I don't think the 23 will hold. I think we'll come all the way back down towards this 15 and see if we can pick up buyers where we found them before in this 15 area. Key line in the sand is going to be 1909.75. Anything below 1909.75, I'm looking for a bigger move down into the test of the 1900 and 1897.75. Anything below that, I move back down to the 1890. If we can hold this 41 and accept 49 again, look for them to come up and test the value area high and test that 60 area again. A break above 60, look for 64.75 and a move up into the 67.75, which will be our key line in the sand above. Above 67.75, I'm looking for a move up into the 70s and the next big target above, and another gap close up here in the 85 to 87 area. So just again, take a look at the overnight. We opened up at the 28 area, and then we moved down into the 20 area. Had a beautiful Mr. Sneaky. Believe it or not, I took this trade. I was actually short into it, and I took this trade and I closed it down at 26.75, and then it just kept going. So overnight inventory is net long. Key area to watch is going to be this 36 again, just like it was yesterday at 37 area, 36, 37. Going to be another key area. But right now we're back up into balance around this 42.75 overnight VPOC. If we can accept this, look for that 44.75 and a move up into 49 and a break of the overnight high. So moving our numbers over, our overnight high right now is 47.75. Our overnight low is down at 20.75. So we've already had a pretty big range so far overnight. Our overnight VPOC is basically right where we're trading at 42.75. And almost in line with yesterday's balance at 43. We have an LVN here at 36 and a quarter. It's almost in line with yesterday's. We've got this ugly upper distribution, and then this this low volume area, and then this ugly. I mean, this was not pretty. These distribution zones are very blunt, so there's going to be a lot of chop inside of them. You've got the 37.50, you've got the 39.40 area. I'm going to use the 40.50 as a trade area because it puts me below the 41 CLVN and gets me into this lower distribution, and I can target that 38. And then we've got the 36 here as an LVN overnight, but we've got the value area low from yesterday at 35. So I'm going to use 35. But if I'm getting long, I got to be above the, I would say, 37. So this is going to be a little bit of a no trade zone for me between the 40.50 and the 35. I want to get in and look for them to travel this low volume area and down into the value area low. Below 35, I think you got a really good trade into the gap fill at yesterday's close, which was 30. And then below that, you've got the 26.75 range low. Below that, I'd be looking for the overnight low to get taken out at 20.75. And then all our numbers below, there's the 17, which would be a trade area for me. Let's get rid of this. I don't need that yet anymore. We've got this 17 CLVN. And then we've got the next big target down at 1550, 1275, and then our daily ATR right now is running 3674. So off of the high overnight, that puts our daily ATR target down to 1910. And our key line in the sand is just below that at 1975. Once we get below that 975, I'd be targeting 1905 and a quarter. Below that, 250, and then the next key area is going to be that 1897.75. And anything below that, I'm looking for a move down into the next big target, which is going to be down here at this 1890. Remember, 1890 is still a microcomposite VPOC of this whole balance area that we've been in since January the 7th. And then all our numbers remain the same. Our weekly ATR has been shifted up to 1881.50. Our weekly ATRs are running 74,825. That gives us a downside move. If we hold the 40-50 area, looking for them to move their way up into the overnight high and the target above, which is the 49. Above 49, I'd be looking for 52 and a quarter. Basically, if we hold the 40-50 area today, I'm looking for a move right through this whole upper distribution to test this 54 value area high. And if we break out a value, a move up into the 56 and a quarter, and anything above 56 and a quarter, testing the daily ATR target, and a move up into the 60.75. In that 61 level. Above that, it's 62.50, 64.75, and then the key line in the sand above is going to be that 67.75. And then all our targets are already up there. You've got 70, 50, 72, 77 and a quarter, 82, and then the next big target above is going to be in this 85 to 87 and a quarter. And anything above 91, look for them to go up and test the 2000s. Our weekly ATR target's been moved up to 1995.50. So basically, we're going to open up in range and in value. I'm looking for them to test the 40, 50. If they don't hold, looking for them to move down to test the value area, and looking for responsive buyers to step in somewhere between 35 and 29. If we get below 26, then I'm looking for them to take out the overnight low and come down back into this 15 area. If they hold or bounce in this area between 35 and 29, I'm looking for them to rotate up into that 49 area, take out the overnight high, and grind our way up into 54. Above 54, a test of 56, and anything above 56, I'm looking up for the 61, 62, and possibly 67. I think we're going to get a rotational day. I don't know if we're going to bounce first and fail up here in the 54 to 56 again and come back down into the 29, or whether or not we come down and bounce from there. but below 26.75, look for them to go down into the 15 area. I don't think we're going to see the 15 area today. I think we've had a pretty decent bounce overnight. Buyers continue to come in. My main hypothesis is a move up and responsive selling, stepping in and moving us back down into the 29, 26 area, or a move down and finding buyers and taking us up into the 49 area. It's going to be a tough trade day. You've got some blunt areas on the upper and lower bottom. The best two areas of trade are going to be off of this 40-50 and this 35 area. It's going to be choppy in these two distribution zones. And it is the beginning of the month, so we're going to get a lot of positioning going on, and we have to be prepared for that. Currently, right now, our Keltner center line is at 44.25. If we get above it, test of the upper Keltner takes us up into that 49, and test of the 50.25. If we hold below it, a move down will take us down into the 38 area, and that target below in this lower distribution. Just be careful today. They've shown that they can move it fairly quickly, and with these blunt areas, it's going to be a lot of chop above and below us. That's about all I can give you today. It's going to be a frustrating day if you get on the wrong side of a rotation, in my personal opinion. I closed my gold trade last night at 47.40. We got as high as 49.30, so I was worried if I closed it down that it would be a bad decision, but it actually turned out to be a pretty good decision because we're down trading the 43.25. I only left a couple $100 on the table, so I was quite pleased. Right now, we're trading between these two, distribution zones. The key line in the sand right now for gold is going to be the 1250.70. Above that, look for them to test the 52, 53 area, and if we get above that, there's not much holding us down. And I'd be looking for a move up into this low distribution node and up into the 71 area. Above 71, the main target above is going to be this 96.60. If we cannot hold the 33.90, then I'd be looking for a bigger move down into, test the lower side of this distribution at 22, and anything below 22, we're back into down towards that composite VPOC at 1201, with the main target being the 1211, 1210 area. But right now, we're going to see positioning going on and probably bounce in this double distribution area between 41 and 36.90. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.